I love the name of your winner for this week.
Oh, App Lovin'?
Oh, yeah.
APP? Yeah, listen, man. We're big time data nerds, as you know. We are. I co-founded a company called Battlefin. That's one of the first in the data business in terms of as a platform. John and Peter, investors in that company, involved in it with me for a long time. We love to see companies like this. This is a data-driven business.
Welcome to Next Week on the Trading Floor. I'm your host here on Wealthion, Andrew Brill, and we're here to help you keep and grow your money. Next Week on the Trading Floor was developed to explore current trading ideas, market trends, and opportunities to watch. It's real-time insight to help you make informed decisions in the ever-evolving financial markets. And in conjunction with Market Rebellion, we'll give you ideas that will help you in the week ahead. I would like to welcome in Marc LoPresti of Market Rebellion. Marc, how are you doing? And now that most of the dust is settled and not a ton of news out this week, what did you think of the past week in the market?
Well, Andrew, thanks for having me. Sitting in, of course, for Dr. J. You can tell I'm lacking the goatee and maybe a couple of other features that distinguish us rather readily.
Are wearing the hat, though.
Yeah, the baseball hat. Yeah, it's been a very, very busy Friday. And I was suit and tie all day yesterday, running around doing some media hits on some mainstream channels, and so figured a little bit of casual Friday wouldn't hurt anybody. But yeah, certainly, look, an interesting week. As we're recording, market's looking to close the week mildly in the green, up less than 0.25% up across the S&P. So. A little bit of a ho-hum from the bulls, but remaining firmly in charge, our 8th day in a row in the green. I think the market loving a couple of things, right? What we heard most recently from Chairman Powell could have been more hawkish. We heard even yesterday around 3 o'clock, Mary Daly coming out with some relatively hawkish comments, I think related to yesterday's unemployment number. That was a pretty significant delta, Andrew, from what the street was looking for, 231 or 232,000 new claims, where the street was looking for around 211 or 212, depending on. And I think, as we know, there's been quite a lot of money on the sidelines. There's definitely some pent-up buying power. We saw going into the beginning of May, hedge funds with quite a lot of margin interest. So that's an indication that there's some buying activity looking to come to play. So, yeah, it's been an interesting one so far. And, next week, of course, is going to be, I think, even a little bit more action-packed. We've got some really significant economic data coming out next week. Of course, we've got some Fed speak on Monday. We've got the PPI coming out on Tuesday, the 14th, and the all and ever important CPI, that consumer price index. That is, of course, the Fed's preferred inflation gauge. So if that comes in hotter than expected, we could see the Bulls get unseated, and the Bears take charge once again. If it comes in at or below expectation, we could see this bull run extend.
Yeah, and that jobs number you're talking about, that's something that Chairman Powell talked about a little bit in his comments. We know that they look at the CPI and that's running a little bit hotter than they wanted, but he did make reference to that unemployment number and saying, hey, look, we're still looking at this, and kind of left that door open for a cut maybe later this summer or later on in the year, given the unemployment number. So that running a little higher than expected was, I guess, a good thing and kept the bulls in power, so to speak.
Yeah, there's no doubt, Andrew. I mean, look, the Fed explicitly wants the labor market to cool, right? It's something that folks kind of have a hard time understanding. Why would our government want people to lose jobs, right? And well, the Fed has sort of this dual mandate, but a lot of significant considerations, and the labor market has remained remarkably strong. I think stronger than most market watchers and stronger than this Fed had expected. And that is inflationary, right? That tends to propel consumer spending, which is also inflationary. And when you're trying to bring inflation down to that 2% target rate, that's not the kind of thing you want to see. The other information that I think the Fed was happy to see this past week, Andrew, was there was a note out, I think it was from Wells Fargo, that pandemic era savings, this amount that the banks have been tracking since the pandemic, and those pandemic era savings came from things like stimulus checks and side hustles and saving money on gas and not flying anywhere. Well, that pandemic era savings piggy bank is depleted. It's empty. There ain't nothing left in it. And that, combined with the consumer sentiment reading that came out just a half an hour before you and I started the show, indicating that the American consumer is starting to look into their pockets and go, wait a minute, I wish I saw more than dryer lint. And the reality of it is that those factors, along with credit card balances and things of that nature, should start to quell consumer spending, bring it in line. That is disinflationary. That's what the Fed wants to see.
All the more importance on that CPI number that comes out next week that you talked about earlier. Let's talk about some other news. Apple and Rivian, you have an electric car maker. Apple said in the fourth quarter, no, we're giving up our Apple car. We're going to reassign all those people to AI. But all of a sudden, here it is again. A lot of hush hush. We don't know if they're getting back into the electric car business, or are they trying to get Rivian to take on their Apple CarPlay now that they're losing GM? So there's a lot of speculation here.
Yeah, that's true. And look, the chinks in Apple's armor have become, I think, a little bit more apparent in the last couple of quarters than investors anticipated coming into 2024. And Apple's got a problem, and their problem is competition for the iPhone. Not here, right? It's still, if you walk into a cocktail party with anything other than one of these, if you're one of those Android people, people think, well, you must be, one of those beatniks that uses this crazy alien technology. Well, hey, that ain't the case, particularly in China, as well as other parts of Asia. And, we tend to forget that's a significant chunk of Apple's market share. So looking at that, looking at enhancing their data business, obviously that was a significant pivot to completely dispense with their previous EV plans. I'm not sure how I come out on this. I may be a bit of a Buffettonian on this news, to be candid with you, Andrew. Apple could, if they wanted to, just freaking buy Rivian, for God's sakes, right? I mean, it's like walking around money. If Apple really wanted to get back into the electric car business, I've always been somewhat skeptical of Rivian. I don't want to bet against any of these folks that are trying to bring companies, electric cars to market, but we know that most of them lose a significant amount of money on every car that's made. I'm pretty sure Rivian is still in that position. They lose, if they sell a car for $100,000, they lose $200,000 on it. That's not a sustainable business model. You don't need to be Warren Buffett to say that math but doesn't work. So I'm not convinced that there's a whole lot of there. We'll see in the next week or so as to whether or not that plays itself out. But I'm remaining fairly skeptical on this Apple-Rivian partnership.
Yeah, I think that as soon as Apple can figure out how to put four wheels on the iPhone, we may be in business and talking about something very different.
Yeah, but absolutely.
Warren Buffett made a lot of news, and if the first quarter dumped a whole bunch of Apple stock. But let's be real, Apple's still 37% of Berkshire Hathaway's portfolio. So really, what's the big news here?
Yeah, he had a fair amount to sell. And of course, last weekend was Berkshire Hathaway's famous annual shareholder meeting / jamboree hoedown. I'd love to actually go at some point in time. It's always right before the Milken conference. So I suspect there's a lot of private jets that go from that part of the world over to LA. But but probably a little bit more about the size of this trade than it is on a relative basis. Still, of course, one of Berkshire's primary holdings. But I think Apple's got some significant concerns when it comes to this encroaching competition into its Asian market share.
And one other big company making news, Google possibly acquiring HubSpot in a big deal. HubSpot stock has been up a considerable amount lately, so now Google making a play into that market.
Yeah, listen, I love that for both companies, right? I mean, Google, of course, doing everything that it can to shore up its defenses against the encroaching online ad sales, SEO, search engine optimization business, right? Advertising based on search, with everything that folks expect AI to do from all of the various competitors. AI is the single largest existential threat to Google's very significant historical moat around search driven ad sales. So, looking to get into other stuff. And HubSpot, man, I mean, we use HubSpot at Market Rebellion. I've used HubSpot with other companies that I've invested in and I've been an executive management of. It is one of the go to CRMs. And, you got to question whether or not Google is looking at HubSpot as a potential acquisition target for that customer base, right? So if you want to substantially expand your B2B client base, buying a B2B company like HubSpot has no B2C offering of any kind, might be a good way to do it. I think they may pull the trigger on this one. We don't necessarily teach or encourage merger arb at Market Rebellion, so I'm not looking to necessarily do that, but I think that could be too attractive of a opportunity for Google Alphabet, of course, to pass up.
And for the record, Wealthion uses HubSpot as well. So that makes two of us, Mark. And, two customers Google will have if they actually do pull that trigger. So let's recap the predictions from last week. Spot on with Starbucks. Everybody worrying about people are going to stop drinking expensive coffee. But Starbucks stock started to rise.
Yeah, it did. And look, if you consider what cocoa futures and cocoa as a commodity has done so far this year, my God, all-time high after all-time high. Certainly some concern about how that might wind up translating at the end of the day into the price of a mocha chai double half calf latte at Starbucks. But certainly not disappointing traders and investors so far this past week. We had unusual in that name that gave us some indication that might be coming. That's unusual option activity. We'll talk about a little bit more about what that is later in the show.
And I see you got your Starbucks dictionary out, and I haven't gotten that yet, so I couldn't order whatever drink you just rattled off. I wouldn't be able to order. So
totally made up. Totally made up.
And the loser of last week, Spirit Aerosystems, obviously, you see the chart there, on its way down.
Yeah, no question. I mean, look, lots of pressure, lots of headwinds, if you'll excuse the pun, for the airline industry. Obviously, Boeing, ongoing concerns, ongoing and new safety investigations. These are things that are expected to continue to cause headwinds for the airline industry, and this was certainly no exception.
Much different when you're flying, because you want to take off and land into a headwind. But when you're a stock, headwinds, not so much.
No, sir.
The unusual options activity last week, was Palantir, and we'll get into that. And there were some call options, and Palantir was flying, and then their earnings came out, Mark, and even though they did well, the stock dropped.
Yeah, that's true, and that was one of the things that happened, by the way, in last week with a lot of earnings, and that is companies met or exceeded, but the stock still sold off on guidance, right? Because as we were saying earlier on in the show, we are starting to see signs of weakness in the consumer. Good thing for the Fed, very disinflationary, maybe an indication that the Fed will start cutting sooner, which would be a good thing for stocks, of course, but not a good thing for companies that rely quite a lot on consumer spending. Palantir, of course, this is another a B2B company. This is a data company. They have a lot of government clients, a lot of GovTech. It's a company that I've liked since they went public, even before they went public, by the way. But they offered some fairly sanguine guidance in terms of the demand picture for the upcoming quarter, and we did see the stock sell off on that news.
So let's get into the indexes a little bit. You, at the open, alluded to it. The Dow it had an upward trajectory. It was under 38,000, now is above 39,000. So the Dow had a good week, as you alluded to, 8
Mhm.
straight days of gains. We're
Yes,
looking
sir.
for another one on Friday as we record this, so that should continue. The Nasdaq kind of had its ups and downs, kind of finishing almost where it started.
Yeah, it's looking fairly unchanged on the day right now as we're recording. I mean, look, most of the major markets are relatively unchanged. The Dow up about a quarter, the S&P up about to spot 15. So, like I said at the top of the show, I think the bulls are taking a little bit of a sigh of relief, a little bit of a pause after what has been a fairly decent rally over the past 7, 8 days, depending on which your preferred index is, and ahead. Not surprised to see this kind of thing, Andrew. Ahead of a week like next week, where we have such important economic data as it relates to the anticipated trajectory of the Fed, you tend to see traders kind of say, maybe we don't need to go too risk on today. Maybe we can wait until next week. Like I said, we even got some Fed speak coming out on Monday before we get that economic data on Tuesday and Wednesday. Of course, jobs next week as well. So I think the market's sort of taking a much needed rest here on Friday. Not such a bad thing. But directionality of the indices overall for next week are really going to be dependent on where those inflation gauges come out.
Just to recap a little bit, Starbucks nailed it. Spirit Aerosystems nailed it. Palantir, the jury's still out because John was talking about a May 30th calls, so it still could get there. So jury's still
Yeah.
out on that one, and we'll see, right?
Yeah, we got a lot of runway. I mean, certainly like that was bullish, right? And I think we like to hold ourselves and keep ourselves honest. Sometimes we get it right, sometimes we get it wrong. That was bullish activity. Certainly, Palantir's been acting pretty bearishly, but we still got 20 days from the day that we're recording for those options to expire. And in the options market and in the stock market, man, that could be a lifetime. So John could still end up being right. I don't do well betting against his calls, generally speaking.
And judging by Palantir's uh, movement after last quarter's uh, earnings call, it did the same thing. It
Yeah.
was up after the call, it went down, and it started to creep up again. So there's still time, and we'll see if that comes to fruition. Let's talk about next week. It is called Next Week on the Trading Floor for a reason. So I love the name of your winner for this week.
Oh, App Lovin?
Oh yeah.
APP? Yeah, listen, man. We're big time data nerds, as you know. We are. I co-founded a company called Battlefin. That's one of the first in the data business in terms of as a platform. John and Peter are investors in that company, involved in it with me for a long time. We love to see companies like this. This is a data-driven business, and they are just blowing the freaking doors off. Totally beat the street's expectations. Year-over-year increase in revenue, Andrew, of 47.9% on almost 70 cents earnings per share versus negative a penny for a year ago. This company just absolutely blew the doors off. The stock closed up yesterday, I think up 15%. Stock's up another 2 and change as I looked just before we went live today. We're loving App Lovin', and even as much as this thing has run, it could go even higher based on what they anticipate and what we're reading in terms of the overall demand for what this company does.
Yeah, like you, I checked it out. Popped $10 last week alone. So App Lovin', look for that one to continue to run. And your loser of this week, Mark, I was surprised because coming into the summer travel season, you would think that they would travel, but your Airbnb stock, you're looking to not do so well.
Yeah, I mean, and this one was another one where earnings were in line, revenue beat, right? So that's pretty good as far as an earnings report is concerned. You got an in line and a beat in terms of the top line and revenue, but the guidance not so great, particularly on the overseas demand side. Look, I think Airbnb and other put your property up for rent on a platform, peer-to-peer type thing. I think the major bearish headwind that these guys are facing is from a regulatory perspective, right? You see and hear city after city cracking down on the ability for folks to put their apartment or their home up on these platforms without incurring all sorts of taxes, fines, penalties. Those, of course, attempts by local governments to bring the money back to the hospitality industry, wherever that may be. So, and I think also, this is going to see a theme here, folks, looking at that, ongoing concern about whether or not the consumers are going to be able to continue to spend, even with summer travel, which people tend to splurge on as much as they did the previous 2 summers. And I think the answer, especially when we look at that sentiment that came out just before the show, the answer is probably no. So that's why you got that guidance from Airbnb that things may not look as rosy. And it may be, as I said on our Rebels Edge show yesterday, it may be a cruel summer. I forget who sang that song from my high school days, but it may be a cruel summer for Airbnb.
It's a cruel, cruel summer. Yes, I remember the song. So let's move on to our options and explain to us the unusual option activity, and then explain to us what you're seeing with that activity.
Yeah, sure. So UOA, or unusual options activity, it's one of the things that we are known in particular for at Market Rebellion, and that Pete and John have been known for years. Essentially, what we're doing is the algorithm and our editors, there's humans involved, it's not all just computers, folks, are scanning the markets constantly for options trades, bullish or bearish, puts or calls, buying or selling of either of those instruments that are unusual in a particular way, either by the size of the trade or the date of the trade or the lack of news around a particular, or anticipated news around a particular name, right? Or a combination of those things. That sort of gives us the indication that somebody somewhere knows something or thinks that they know something. So we track that activity, we run it through the algorithm, we look at other factors as it relates to the stocks, and we offer this unusual options activity to our subscribers as signals, as things that they can use to help inform. We don't tell people to buy or sell. We don't tell people to put a particular trade on. This is educational in nature, but it helps inform us, and it has served us very well. So what we have up on the screen from our fantastic editors is call buying the right to buy a stock at a future point in time at a particular price. We saw that tends to be a bullish indicator. We saw bullish call buying in Citigroup a couple of times. They rolled this UOA that we're talking about now. It's actually a roll that's from an existing position, gets moved out in time or in price. We saw that in Citigroup. Actually saw a fair amount of strength in the financials this past week based on, higher for longer for banks tends to mean that they can continue to make good money. Citigroup has been dazzling investors over the last couple of earnings calls. Not terribly surprised to see that. But yeah, that's the unusual we have today. And I believe that that's also one that we covered on John's 3 at 3 service. That's one of the subscriptions that some of our more active traders follow and watch every day.
Yeah, and if you want to know more about options, head over to Market Rebellion. Not only they talk to you about options, they teach you. That's part of their educational stuff, teach you how to deal with options. But I have a little tidbit for you. Cruel Summer, Bananarama. I've been told Bananarama, but Taylor Swift, or if you're a Swiftie, Taylor Swift has a song by the same name. So Bananarama, Taylor Swift, however you want to go, that's Cruel Summer for you. So let's recap your winner of the week, AppLovin. I guess they're an app company, right? They give you a platform with which you can put your apps on, and with people out of work, they need something to do. They're going to sit with their phone and they're going to play with their app. So AppLovin is already popping. You think it's going to go more. The loser, Airbnb. Maybe the travel season isn't going to be as robust as we think it was. And the unusual activity for the week, unusual option activity, is Citigroup, a bank stock. And the banks they actually reported early in this earnings season. All of them reported fairly well, so that was a great great time for them. And we'll see if those we'll recap those next week, and we'll see how we did. And those are the stocks to look out for. But Mark, thanks so much for joining me. This was awesome as always. And I know that we know where to find John, and we know where to find Market Rebellion. Where can we find you if we're not watching CNBC or any of those shows? Where else can we find you?
Well, you can always find me on the Mark Rebellion Twitter handle, on our YouTube, where we cover, of course, our Rebels Edge show that we do Monday to Thursday, every day at 1 o'clock. And that channel also tends to cover clips and highlights from my mainstream media appearances, some of which you just referred to. My personal Twitter handle is at MXLESQ, where I also post a lot of that and some of our information, updates on what we do at Mark Rebellion, conference appearances, things of that nature. But yeah, go to markrebellion.com to learn how you can be a better, stronger, more informed, and hopefully successful independent trader.
All right, Mark, thanks so much for joining us. And thank you for watching next week on the trading floor. We hope you enjoy the insights and forward-looking information from Mark and Market Rebellion. If you need help being financially resilient, please head over to wealthion.com and sign up for a free, no-obligation portfolio review with one of our registered investment advisors. If you want to find out more about options trading, head on over to marketrebellion.com. And remember to follow us, Mark and Market Rebellion, on social media for the latest news and information to help you invest wisely. And if you could like and subscribe to the channel, we would greatly appreciate it. Don't forget to hit the notification bell so you can find out when we post new videos to the channel. Thanks again for watching. We'll see you next week right here on the trading floor.